Hey folks, welcome to the show. Hey Sharad, how's it going, man? We two are the odd two out in a group of three. We both are wearing thick sweaters and are in our much wintry surroundings versus our guest who's joining us from Mumbai for the last episode of the year. How are you feeling, man?
I'm feeling good. Yeah, it is the last episode of the year. I didn't realize that, but no, I'm excited. And last episode of the year, so coincides very well with Delhi winters. That explains the sweaters, and I'm looking forward to the chat. We are obviously our sweet spot of the larger fig bucket, I guess. So we're tackling another piece of the fig bucket, and yeah, I'm excited for the chat.
Yeah, man, you have also become a fig enthusiast more and more. And with that, it gives me great pleasure to welcome Peuli Das, Chief Insurance Officer of Future Generali Life Insurance Company. Hey, Peuli, welcome to the show.
Thank you, Nikhil, and thank you, Sharath. I think the first thing I would like to comment is I'm missing Delhi winter. Being in Mumbai is it can never be wintry, right? So that's all of us know that. But with a good note, it's becoming colder. At least, the coldest temperature was recorded just a few weeks back so far, and I just hope to see a more cold winter under.
Right. No. Thanks a lot for taking the time out, Peoli. Welcome to the show. We'll quickly give a bit of context on you, your background. You're right now, obviously, the Chief Insurance Officer at Future Generali Life Insurance. So I'm assuming you kind of head the actuarial function there. And you come with a fairly long and extensive background within actuarial sciences. You did your BSc in economics from Calcutta University. Then you were at Indian Statistical Institute, did an MS in quantitative economics. Obviously, I think Future Generali has been a recent stint, around 7-8 months. Before that, you were in Accenture. You kind of, I think, changed gears, moved towards professional services for some time. And before that, you were again part of the corporate setup, was in, I think, IndiaFirst for almost 7 years. Interestingly, when I saw IndiaFirst, I remember when I was in Nomura, and I think LNG at that time was thinking of exiting its stake. I think it eventually happened in like 2018-19, but the work on that, I think we started pitching it way back in like 2013-14. So there's a bit of common ground there. Would love to start with a bit of a primer on life insurance. I mean, life insurance is a very interesting category. It's a push product. Everyone needs it or has been advised at some point in time to take it. It's something that is it's not a new age product at all, right? I mean, our parents also are aware of it, we as well. But that being said, I think the I don't know whether that's by design, but the sector is extremely difficult to understand for a layman. I mean, there's a lot of jargon, a lot of terminology on different product classes and so on. So would love to hear from you like a 30,000 feet view in terms of how do you define life insurance. Often it's overlapped with health insurance. There's an investment component, there's a savings component to it. You hear of participating policies with profit, without profit. There are so many different levers and identifiers, right? So now that we have with you, we have you with us for the next 40-45 minutes. Would love to start with a brief primer on different product classifications, and maybe you can share your insight on that, along with what a consumer needs to know when they are especially a young customer, when they are purchasing a life product for the first time.
Right, Nikhil. So I think let me first clarify that it's more of both a combination, a blend of pull and push, right? So no longer it's a push product. There can be pulls really, and we observe a strong pull there. So on a standard, what are the standard products there? I'll not come to the nuances of participating, non-participating. I think you are all well aware. But let me just give a very brief overview of what are the standard products. And of course, the innovations and far more revolutions are underway on each of those aspects. A standard product is pure term life insurance, right? It's not a push product at all, because if you see, it gives a kind of a pure life coverage for a specific amount of term or years. Just like the policyholder passes away during the term, then the beneficiaries receive the death benefit, and that's a vanilla term insurance. But to add to it, the added flavors and the added features which are getting added is like a legacy planning, right? Because think about it, in a very old age, a person is single, but he or she might still doesn't want to pass on the burden of medical bills and funeral expenses to the next of kin. And therefore, a legacy planning of sorts under the term life insurance banner is also evolving. So those are the nuances which are getting added. Other than the life or the term life insurance, which is a pure protection product, I think endowment is where you are referring to also by participating, non-participating classes. But on an overall basis, the endowment policies are like which provides both a savings component as well as a life coverage, right? It's a blend of both these two aspects. If the policyholder survives the policy term, they receive the maturity benefit. If they die, of course,
So just to kind of simplify this a bit, when you say when you mentioned a protection product or a life coverage, they are, I assume, synonymous here, right?
That's absolutely right. It's a pure protection is like a term insurance.
So basically, an event happens and the benefit comes as a result of that event. And in a term life plan, there's obviously some sort of a time period, correct?
Absolutely. Policy term. We call it policy term. So within that, if there is any contingency, any kind of like unfortunate death, there will be a lump sum payment, right? I mean, there can be, again, like much more improvisation of that, how the nominee wants to receive the benefit, but that's in a very standard form of term insurance, which is a pure protection product, right? So now if we come to endowment products, those are the participating. Now, of course, the vanilla definition of that is that if there is a death, there is the coverage amount is being paid to the nominee. But otherwise, it continues till the maturity and there is a maturity benefit. But then again, there are certain flavors to it. People, if you see the improvisation nowadays, which are just like, which are wreaking havoc, in a way, you see that there are income payments, right? And income payments can be lifelong as well. So endowment policies are lifelong. There are income payments to just cater to the benefit like needs of the customers. And customers can flexibly even choose between, say, a lump sum payment to be received at maturity or, what are the periodic income they want to receive in order to meet in the lifestyle or milestones, right? So those are being catered to. Of course, in the protection category, you spoke about health insurance. We have critical illness insurance, which are just like death benefit, but it provides a lump sum benefit upon diagnosis of a critical illness, right? And therefore, these are instrumental in offering financial support during any challenging times. You are from investment banking, yes. So one of the parallel or one of the product is market linked, which is ULIPs. But one of the differences is that even nowadays, the new age ULIPs are completely charge free. So you just see that there is a fund management charge and the rest of the mortality charges are refunded. So it's basically a zero charge product, right? So those are quite in vogue. And this also provides a combination of, basically the death benefit or the life benefit, as well as a market-linked investment component. Right. One more product, which is...
Just 1 second, Peuli. I just wanted to ask you a little bit about ULIP. And it seems like there is a little bit of a polarizing view on how that product is. Like there's a school of thought which says, you should be mixing insurance and investment management in one product. It's got flavors of both, but it's sort of not really serving either purpose. How do you sort of address that, and what benefit does it do? I mean, it sounds exciting that there's a pool of money which is sort of also being promised to grow, and people generally have a bullish view on, let's call it the times we're living in. So it seems all right, but people often say that there is a little bit of a, confusing element of marrying the two. How do you sort of view that?
Yeah, absolutely. So I think if you look at the death benefit and all these life components, right? So what we mean is that the charges. So if there is no charges for that, it's pretty much sold as kind of a free, right? Like free for, it's a free coverage that way. And I think it's a good feature to have your the fund returns. If you look at the ULIPs, as the supporting funds, debt funds or the equity funds are equally good, and they are surfacing in the top quartile also when you compare to mutual funds. So those ULIPs are good promises to a great investment return. Of course, like it's market linked, the risks are there with the investors, but it can give quite a significant savings. But at the same time, even life benefit is also kind of critical, right? It kind of gives 7 times to 10 times of the death benefit, of the annual premium as a death benefit, and it's free of cost because all the charges being deducted in that capacity are refunded. So in that thing, I think it's quite a good combination to look at if you just want to consider both life benefit as well as market linked investment upside.
Right. I think a big challenge when it comes to, from a business model standpoint, it obviously makes a lot of sense because as an insurance company and an underwriter, you're making there are two big P&L items, right? You're making underwriting profit, but you're also making an investment yield, and you basically have a variety of products where policyholders can also get a flavor of the former and not just the latter, which makes a lot of sense. I think the challenge which comes often is the way it is sold, right? I mean, in terms of distribution and like effectively, we have seen through the bank channel often. I'm not talking of insurance, but generally any kind of financial services product that is sold through the bank channel, often the RMs, they are not they don't really communicate the risks fully to the user, whether benefits are guaranteed, non-guaranteed, and so on, which leads to a lot of issues. It's not really because I imagine as long as the risk has been communicated sufficiently, the product is not something of a question mark. It's the sales practice which is a question mark. How do you see that evolve over the years? Obviously, with and today's world is very different, right? There's a lot of digitization, a lot of such products can be compared, documented, figured out by a retail customer. But how do you view it as an underwriter in terms of making sure that the best practices are incorporated both digitally and through a feet on the street model?
No, absolutely. That's a very critical point because, it's not the fault or it's not the product per se, right? It's about the sales discipline, sales approach, which defines the entire product or that makes an impression about it. So very true. But if you look at it, like the IRDA, right, how the products are being sold, there are a lot of mindful, like the customer needs to be mindful of several kind of crucial factors. And that's the self-awareness of the product itself also needs to be on the rise. Because what happens is that it cannot be just based on whatever being sold to you. You should be able to have that self-awareness or the financial awareness to be able to make an informed decision. And how will you do that? There are ample levers for you to make that informed decision. And what are those? So I'll tell you, as a customer, if you just place yourself in the shoes of a customer, you have to first ask the sales people also, right? What are you covering me for? What are your basically the financial obligations, the dependence, or what are your debts? You have a mortgage, you do not have a mortgage, what is your financial income, or what is your total corpus, etc. Because you know that what is the risk profile of yours. So you have to communicate that. You have to understand from this, you have to make the sales force understand that this is what your exact needs are. Mm-hmm. So that conversation, that awareness has to take place. So that's a basic. You have to be mindful of this. Secondly, you have to also there are right now with the digitization, there is so much of accessibility for the customers to go to different platforms, find out from different websites, different aggregators, different financial advisors, and make a financial sense out of the product. Because as you said, many financial products, even insurance products might appear as complex, but that doesn't mean that we can circumvent the entire aspect of understanding it much better before the customer can make an kind of a sale, like purchase. So in that aspect, if you just go through the entire human life value calculators, which are offered on the websites, and these are quite sensible estimates for finding out what can be the ideal coverage. I'm just trying to give you some examples what are in the free for you to make an informed decision. Then, of course, there are different nuances with digitization. Of course, with innovation, with disruptive technology, you have a lot of innovations, and you can kind of find out a lot of products and features, right? A flexibility. You have to, as a customer, you have to understand what are the features you are signing up for. Whether you need a short term, whether you need a long term, whether you need cashbacks or incomes on a periodic interval, or actually you are more relying on a lump sum or a kind of an accumulated amount at the end of the period. Are you signing up for any riders or any additional benefits? Do you have any milestones to achieve and meet? So all these decisions and all this information, awareness, discussion, brainstorming has to happen once you are buying. Once you have to take a buy call. And IRDA, interestingly, I don't know how many customers go through it for all these products, be it unit link, be it an endowment product. There is a clear benefit illustration, which is a very numerical way of understanding what are the benefits being offered in the product, what are the timing of the premium payments, what are the surrender values, how it is developing with the premium payment. Maybe the early surrender is not good for the customer. So all these realizations should dawn in when you kind of look at the benefit illustration. So it's very important that whenever a sales advisor is selling something to you, you have to question also, you have to go through that before making a purchase.
Yeah.
And of course, right, there are, with the digitization, you can you can just go to the chatbots, you can ask people, you can have this websites to go and who will explain the benefit illustrations to you. So there are so many forums for you to access the data to make an informed decision. So these are,
I totally agree with you, but I also feel that especially customers at the retail level, I mean, they're inherently a bit lazy. I mean, this requires a lot of work, right? And the interesting parallel that I saw in the UK was that there was something called the Retail Distribution Review, which had happened a few years back, in which IFAs or RMs, effectively from a trailing commission or manufacturer incentive-driven construct, they all moved to a advisory or a fee pool type of a construct, where a customer pays the advisor and hence the advisor is 100% incentivized to serve them rather than the manufacturer. In India, obviously, we are not there yet. But as an industry participant, do you see IRDA also kind of putting this point in focus at because I mean India, it's slightly complicated because customers also don't want to pay upfront to advisors, right? I mean, so the appetite for upfront fee is something which no one wants. People are okay with having it baked in as an expense within what the manufacturer pays, right? So do you see any kind of a shift, because India is also now becoming a more penetrated market, right? And I'm guessing the things that happened in the West, it's pretty much a leading indicator for what may happen here. But from a industry participate standpoint, do you see that? Do you see the conversation even playing out?
Yes, absolutely. So the conversation is, see, it's a function of engagement, right? Like earlier, if you look at the customer engagement was very limited, right? So customer were just told to like whatever they were sold. So that's why it's a very common concept in life insurance that you sell to the distributor, not to the customer. Okay, so that's what used to happen. But nowadays that shift is underway, if you look at it, because the customers' awareness are increasing. There are three things which digitization is definitely contributing to. And good that we know our devils, or we know our evils, which had been hampering this kind of an insurance penetration. And with the surge in insurance penetration, or at least an intent to promote insurance penetration, we understand what are the three key problems with customers and the sales distributors. One is definitely the lack of awareness, which is being kind of addressed. The cultural perceptions, as you are currently saying, right? It's more of a cultural perception. The insurance products didn't used to be popular also. But if you look at the right now, the innovation of the new age, the way you are seamlessly making customer experiences, you are trying to have more straight through process, or you are using all your ML and AI tools to make automated underwriting. It's a bliss for the customers to have a very seamless journey, right? So that's making things very popular also, right? So they want to be engaged. They want to know about the customer experience. They want to invest in the product, which was clearly missing earlier. And of course, like there are digital initiatives. What I was trying to say, that IRD is definitely coming with a Bima Trinity, or like so many huge initiatives to promote insurance, make customers aware of the benefits of insurance, and that is on the rise. So I think with the growth of insurtech, with the growth of digitization, with the growth of the all the opportunities powered by technology, you have a lot to change, right? You see a kind of a paradigm shift, or a very drastic change from what we used to earlier have in the industry. It's going to be a revolutionary change, Nikhil, I think. And these things are going to mean more customer engagement, more customer interest, more customer excitement, popularity of the insurance product, and everything is becoming quite supportable and sustainable because of the the upcoming technological advancements.
Do you see, like, from general insurance, insurance products as a whole, I get a sense that penetration is increasing, interest and awareness is increasing. But specifically for life insurance products and for the younger demographic, do you think that interest is going up or is it flattish? Like, if we were to just, and the reason I'm asking that is there is a lot of interest and heightened involvement by that age demographic on the equity investment side of things, at least interest, right?
Yeah.
There is, and I would suspect that partially eats into the wallet share. The same money which was probably going for set and forget life insurance product is now being played into the markets. And I know we talk about very small numbers and probably urban belts, but do you see the younger demographic also resonate with a product like a life insurance the same way that the previous generations associated with?
No, of course, because so previously it used to be a myth, right, that it's only for the breadwinners. But if you look at it, I'm just talking about a very vanilla, very standard term insurance product with which we started the conversation, which was there even previously, which is there even now. But if you look at the outlook and approach towards it, just like think about it, even a single person, okay, like they do not want to pass on their burden and they want to be self-sufficient. What will happen if they have a certain mortgage to pay off? So all those things, a need-based approach is developing and evolving very much. And therefore, if the young generation, they are getting convinced about the needs, there are two things which are playing at the same time. One is a need, right? Even for the gig workers, if they have to, they have certain liabilities, of course, they will go for a life insurance or like an insurance to meet their different needs, right? So it's a need-based approach, number one, which is defining the entire insurance space together. And that's what IRDA is also driving. It's not about certain segments. It's more need-based products. And thirdly, if we come to the young force, what are one of the most attractiveness of equity trading. So if I look at all the people nowadays, they will be busy trading in office, or I hate to say that, but they will be opening their trading screen and doing all these tradings, right? It's quite exciting. But what makes it exciting is also the technology part, right?
Yeah.
So if you give more options, more flexibilities, more choices to be made, and that it's going to be quite a very smooth and a seamless journey of buying insurance products. It's not so hard to buy, hard to understand, and not so risky. Of course, you can balance risk and return there. Mm-hmm. So yeah, I think the young generations, they are quite pursuing this kind of insurance products. They are interested. What are the products you are coming up with? What are the new features there? Mm-hmm. What is it providing? Is it only income? Can I just mix and match this kind of a thing? So all these things are becoming quite trendy and supported and fueled by, of course, technology, right?
It's interesting, it's a psychological assessment, which no one knows, but we also see when we speak to fintech lenders, right? There are lenders who are lending products to retail investors who are borrowing for an expense, for a travel. With very subscale ticket sizes, 30,000, 20,000, 40,000, right? So there's one end of a market characterization there where people are willing to borrow to fund a very short-term expense. There is no capital asset being built. And then on the other hand, we're also sort of, trying to gauge the same folks to look at a life insurance product, which really gives benefits not to you, but people around you, and which kicks in, 30, 40 years later, I guess. So it's a very interesting mix of demographic, right, that needs to be targeted. And that's where I was coming from. So, but it's interesting that, and I guess ULIPs probably appeal more to that generation anyway then, right? It's like a cocktail of products.
Right, of course. But there are different suites of products which can meet different segments, right, within the young generation as well. Of course, ULIP is one bunch, but I think still the traditional products are nowadays becoming indispensable because the way they are becoming more sophisticated, more flexibility oriented. And more, the ease of onboarding, ease of issuances, the chatbots, you can keep engaged and just talk to the people around, like to the customer representative in the company, what is happening, keep tab on the policy. It's very exciting journey and excitement. I think all of us want to stay engaged and stay excited.
To be fair, the interesting point you made on the traditional products, that makes a lot of sense because I think that's very use case driven, right? When you're looking at plain savings or vanilla products. I mean, anyone can trade on the side or have a bunch of stocks or mutual fund exposures and bonds, etc. But the deployment is one part of the equation, but the efficient drawdown is another part of the equation. And I guess that drawdown is something which insurance is able to productize way more. And I'm guessing with tech now you're able to also fractionalize it, right? I mean, you can actually have very, very small ticket exposures, and it's just something which is passive, which kind of goes in the background, and one obviously can do the active investments on the other end.
Right.
So is it,
right, absolutely.
Yeah.
So you can capture the entire, like, all kind of segments, right? Like you can have, probably for young generations also, you have something to offer, and they will have some milestones in the future to meet. They might be young today, they might get married. So while market linked or unit linked are can be quite popular, but I think still they have.
But I think market linked and unit linked is something that they can play on the side as well, right?
Yes.
But the other more traditional asset classes is a different ball game altogether.
Yes, and they want to be self-sufficient, right? So, like, I'm just seeing that even traditional products, because of the flurry of products which is going on, which is available across the board, you want to compare. You look at the aggregators, right? The web aggregators, how much comparison they provide. So today, if I sit in a young crowd also, they will talk to me about certain company, other companies' products coming up. Okay, what are different you are offering? So those kind of interests and awareness are growing. So it doesn't mean, so whatever engagement they get, like, just probably by just knowing the products, or even just looking at the website. And there's a lot of buzz being created in the websites about a product launch. So these things are becoming a lot of marketing game as well to keep people engaged. So it's not only that ULIP will keep you engaged. It's about the traditional pool of products which can keep you engaged throughout your lifestyle. And life insurance is about a long term, right? So what you do today might not be always just the only important factor. Of course, what you want to do in future is one of the most important stuffs. You are going to have some milestones. You are going to have some dependence. You might be having some ailing parents. So it's a lifetime engagement which you can think about. And I didn't speak about that annuity as well. Yeah. Life insurance companies are offering retirement solutions, right? So if you just talk to a very rich customer, so they also would like to understand, okay, what kind of an inflation protection I can get after retirement? Where do I, invest my money? So maybe they do not want to make an investment in unit linked, okay, or market linked because of the known risks, right? But they would like to invest their entire corpus on an inflation protected, and there are increasing annuity with time, and they are like secured for the rest of their life. So I'm saying that there is actually a need for all ages. So be it young, be it the middle-aged, be it some kind of, towards the end of the career, or like even the retired population. So there is always a need and always a case for life insurance products. Okay, of course, with the innovations and new types of products coming up every now and then.
Right. It's like annuities is very interesting because I think when it comes to retirement corpus, the tax efficiency of drawdowns is a very, very key consideration. And because I mean, and secondly, there is always, and I think as India is getting more and more urbanized and the family structures are breaking, unfortunately, there are lots of senior citizens who are living independently. So for them, it becomes a much more a grave concern in terms of having some sort of a fixed income stream.
Right.
All the way.
Right. Absolutely, and it used to be for your needy people, but that is a myth now.
Yeah.
Right, because you are actually having wealthy purchases of insurance as well.
Correct. How has you're an actuary, so let me ask you, how as an actuary the world has changed over the last 20-30 years. What's been the role of technology there? I mean, and a very interesting example comes to my head when I'm asking you that. I mean, we were at some point in time we were involved in the IPO of Just Retirement, which is I think an enhanced annuity player in the UK, right? So at that time. Right. I remember there was a very big buzz there about enhanced and impaired annuities versus traditional annuities. How the risk is better priced by getting additional data on lifestyle choices, etc., how the questionnaires were becoming bigger and digitized. At that time, I remember there was also on the non-life side a lot of technology coming in on car insurance. They were installing boxes in vehicles to track driver performance. and whatnot. So in your particular cohort, how has because I mean here you're obviously dealing with things like mortality and illnesses, and I'm guessing the law of large numbers works here more than most, but I'm sure from a technological standpoint there have been innovations which you have also seen.
Right, absolutely. So as an actuary, if you ask me, so that's my, of course, that's a familiar terrain. And what I see is the biggest driver of this entire the revolution is data-driven opportunities, right? The way you look at data, the way you analyze data, the way you can use data, utilize data is totally different from where it used to be. And data is a main pillar, right? Based on which, be it general insurance, be it life insurance, where you do an estimation to find out the risk. So data is, I think, the big driver here. And I'll just tell you how the entire structuring has actually changed. Now, we talk about ML techniques, right? And this may be very effective in bringing out hidden patterns in large volume of multidimensional data without taking recourse to any major structural assumptions. That's a basic difference from a fundamental data analysis, which used to be that's just prevalent a few years back. So this means you are not restricting yourself to any structure or a framework. You are looking at a set of unstructured data pool. So the way the consumer behave might change in response to a simultaneous change in product design and shift in the macroeconomic drivers, and that doesn't have to be necessarily modeled on a predetermined framework, right? Instead, a data scientist, or if you look at just ML tools, they will be having that enough expertise and rules that can be expected to unearth the same patterns, which might be buried in the data. So this data will tell us about a customer, as you said, right? Like how can you do that kind of an kind of AI based analysis? Now, if you have that data, you will find out that a person who is suppose having just insured a house, that person might be actually needing, you will be able to identify other needs, related needs of that person. That person might be having the propensity of an insurance coverage for protecting the dependents, or maybe they need some medical coverage for the aging parents. So all this unstructured data will be able to unearth, right? So this means that I see that the way the data-driven opportunities are evolving, so those are more to do with identification of cross-sell and upsell opportunities, as well as bundling of products, right? Like you can bundle non-life products together, as I just tried to say. You can actually bundle general insurance products and life insurance products too, in order to make a more comprehensive solution-based outcome for the customers. So data is definitely the pillar of the entire analysis for pricing, right? And I'll just give you a few more examples. One is definitely the opportunities, and even that the opportunities are fueling. One of the reasons is that with data, you are able to make a predictive analysis and a more accurate risk estimation, right? If you look at the risk, right, risk is the main aspect which we have to consider, and especially so for life insurance, because it's a long-term business. So what you do today is going to impact you in future, right? So as an insurance company.
Yes.
So definitely the personalization and the insights are much more sophisticated with the customized or bespoke risk estimation you can do. It's a much more evolved and sophisticated analysis, where integration of the data analytics and AI in insurance processes will allow more of accurate risk assessment. And this means that you will be enabled to provide more personalized policies, more customized needs of the of the customers. And added to that, like data, and if you just join the technology, to look at the insurtech. Now, what are some of the main attributes of the insurtech companies are that they can tie up with Amazon of the world, and they can provide cloud computing. So even the data storage, data accessibility is not an issue for you. You can do an RPA, you can have a bot, like everything to do your dynamic pricing, and so much of an seamless experience, customized product and innovation is possible with data and technology both put together. So that's, I think, is the biggest driver of what used to be before and what is now. And that's going to even just be heightened in years to come.
And how far do you think we are to have such granular solutions that each person has a bespoke health insurance policy? I mean, and we look at wearables, right? People are locking in a lot of digital data points about their own heart rate, metabolism with the Apple Watch and whatnot. There is data being recorded. Now, are insurers using it at an individual level to price the risk, or how far are we since we can get that individually priced?
No, of course. So there are like all these companies who are promoting this fitness bands, right? Wellness apps tracking BMI, stress, and physical activities that can be effectively used to determine the price points and risk management, both together thereon. And if you look at it, so of course, like IRD also came back in just few years back, and that's been getting improvised from time to time. The sandbox. So they were giving an opportunity to insurance companies to leverage this data computation system to and kind of integrate this apps based data and provide a more customized pricing. So it is already there.
Okay.
I think it can only improve with time, because now these solutions are becoming quite popular, right? And people are also happy because we are taking into account the customized perspective, their own features in while giving them a pricing. So it's no longer it's definitely a pooling of risk, but you have a bit of personalization here in order to make each customer feel that the pricing has been done uniquely for them. And I think it's a good feeling to have, right? So much of innovation is going on. Yes.
But I guess it's always like a marriage of broader averages, right? In terms of like wider population. And and I don't think you need to even go very granular. On a customer by customer basis. That might actually play an interesting role in a sales funnel, but effectively as an underwriter, probably it's more of cohorts which interests you. Is that understanding correct?
Yeah, but even underwriting also, if you think like the way the underwriting gets done, right? That's also evolving with the NLP, the natural language processing, or AI based. It's automated underwriting nowadays, right? All the biometrics are getting done.
Right.
Then you have all the issuances, or like you're populating the proposal forms on the fly because of all this kind of AI and ML tools. Now, what is the outcome? And at the same time, you are having a dynamic risk scoring because you have all this. Yeah, right. So I think the automation of the underwriting is also the one perspective, and that if not the pricing part of it, right? So okay, maybe there is a dynamic risk scoring, and you still will be able to price a cohort of people, as I heard you mentioning, but it still means you're giving a very personalized experience to the customer while onboarding, right? So that makes a differentiation. So while definitely there are two parts of pricing. One is pricing as a pool, and one is also the underwriting. So that is still on a one-to-one and on a kind of a customized basis for the customer, and that will remain attractive proposition for anybody who is trying to go to an online model. Think about a distribution channel being added. You kind of see the entire on one-to-one individual basis, and which will be still improvised with the AI and database revolutions.
How? Sorry,
From ecosystem standpoint.
Sharad, just a second. I think there's something off, and I'm not able to record. Give me a sec.
Do you think in the ecosystem, manufacturers and do you think distributors are losing some of their relevance in the wider ecosystem? And when I'm talking about feet on the ground kind of distributors. One can argue that even digital avatars of the same distributors are doing the same job, but my own experience is always go to a platform, compare prices, and then renegotiate and say I'm getting this from this guy. And always there's a 2,000 to 3,000. I'm talking about auto insurance, but there's definitely 2,000 to 3,000 delta when I would just say that this guy's offering me at this price. I'm literally on the website, and just we'll match it. This is how typical conversation goes. And I've always seen benefit in changing my insurance provider every year. And again, I'm talking about auto specifically. But do you think when you have these big platforms which are sort of doing all the comparison analysis, there is the relevance is shifting, right?
Absolutely. I think online channels, that's what actually I meant, right? It's becoming more, that's more of a direct, where you probably looks like that the relevance of distributors are a little bit coming down. Because if you look at an online journey, so online journey is also tapping in other merchandise sites, right? And they're trying to find that outreach. They're trying to grow that outreach. So if you have a footfall in the website, then you try to integrate with the InsurTech's help, of course, other travel sites or other retail merchandise sites, right? So those things are making a very holistic distribution retail space itself, but capturing a lot of population there, right? A lot of target segments there. So it might appear, yes, like the distribution are losing, the traditional modes of distribution are losing more of their relevance. But that said, Sharath, I think it still will stay because somebody has to promote or steer this as well, right? You need still some kind of a distribution base, not maybe with the help of the entire architect itself. You still need distributors to explain the products or so it's just like they might use the online or digitization as a conduit, but they still remain as a main people, right? That's the engagement thing, right? You give them, but the financial advisor or a distributor kind of an hat you can never get rid of. So I don't think that distribution should not be there because it's the insurance company is also more about trust. So they will always feel very trusted if you have an assisted sales kind of a model, right? You can have a lot of plug and play in the website. You can have a lot of experiences, good customer experiences, or the way you can navigate through it and make proper choices. But those choices need to be also informed, right? So you will probably at some point of the time still look at distributors, and therefore when we say that we are selling the products to distributors, they should also have this onus and responsibility increasing so that they do not misuse or abuse this. Because now the customers for any kind of a policy servicing and everything, it's basically automated, right? It's the distributor customer engagement is in understanding the product, and distributors onus is to make sure that the right product has been sold to the right customer. So that still stays, but the operational aspect, the customer experience, the choices, the flexibilities, I think those are being totally changed in the current era.
Understood. Makes sense.
In terms of like the market as a whole, like when you look at life insurance, I mean, it's still largely offline sales market, right? I mean, like the bank channel is pretty important. Offline distributors are pretty important. Online sales, I'm imagining, is a small and but fast growing component of the whole. But like when you look at from a demographic standpoint, are we looking at like the 150 million people living in tier 1, tier 2, tier 3 cities? Is that and within that also, like I remember Mr. Biani's quote, like he recently did a podcast where he was talking about India A, India B, India C, right? And where India is like 100 million or 80 million people, guys who hold demat accounts, guys who are in large urban areas, who have salaries, who actually have people to assist them in their day to day living, who have house help, who have helpers, etc., etc. And then India B is obviously the house help, the helpers, and those people. And India C are the guys who are on aid, who actually have some sort of a state support. So, what is the core segment for life insurance as we speak? And if it is beyond India A, what are the product innovations you are seeing? Is it sachetization of products, which is what India B will find more interesting? How do you see those trends?
No, absolutely. So it's insurance for all by 2047. That's the goal we have, right, in mind.
Right.
So that's what the entire government, IRDA, they are driving. And if you look at the entire the initiatives which are being taken by IRDA, so what are those initiatives? Let's talk about few of them. So they had made the Pradhan Mantri Jan Dhan, right, like compulsory for the banking accounts, and they have also linked the Pradhan Mantri Jeevan Jyoti Yojana with that. Right. So that is itself is a big leap towards insurance penetration, or like reaching out or catering to the masses, right? So it starts with a very simple basic product of life insurance, and a very probably affordable as well. So that's where the entire starting point is. Now, with that, of course, product innovations are, the market is witnessing a surge of innovative product offerings, and insurers are introducing these hybrid policies of life coverage with investment features and just making it more fancy, catering to customers through a lot of customer engagement as well, like bundling different other kinds of products to make it a more comprehensive offering. So all these things are happening, right? So the product of innovations, if you see, but if you look at the drives, and there are simplicities which is trying to just shape up the market. And if you look at Bima Sugam, which is a very envisioned as a trusted platform providing users with seamless experience, has been something which is declared by IRDA. So they're trying to have a Bima Sugam kind of a platform where everybody can access the information. They can just have seamless experience for insurance queries or anything about claim settlement and insurance advice. You have a Bima Vahak, which is more of a contemporary women-led or women-centric distribution channel to increase penetration. And Bima Vistar also, which is a comprehensive insurance product. And so all these things put together, I think product innovation is not in general a product as a whole which is innovative. It's both a combination of the platform which is enabling a product. Maybe it's a very simple product, but you are trying to make it quite a customer savvy in terms of the experience which you are providing, right? Engagement you are providing. So that's where I think we are going, right, with the product innovation. It's more of making a simple product much more flexible, much more feature heavy in the minds of customers by giving opportunities to these platforms, right? And that is what is the IRD's purpose or intent is as well, right? Customer centricity is the key to the insurance companies, and we are a servicing industry. We should be able to uplift our servicing capabilities in order to make everything quite a concerted impact on customers.
Right. No, this is very interesting, Peuli. Thanks a lot for your time, and I think we are now much more plugged in about the ecosystem, and the cost of that was asking very dumb questions, but I think that's how things work. But it's been a pleasure. Okay. It's been a pleasure having you with us, and we wish you all the best in your forward-looking professional journey. And with that, it's Nikhil Arora with me, Sharat Tupran, signing off.